Hello, everyone. Tim Davis coming to you guys with another market review. This is my end of the week market review. Today is March 25th, 2023, as we approach the end of another month, and we're about to go into earnings season. And I want to start off by showing you guys where we're at now, and then towards the end, show you guys where we could be headed. This is we'll start up this weekend with the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And you guys have been following me now for a bit. You know that I like to use this tool to kind of figure out overall momentum. And again, for those seeing this for the first time, this is a tool that pretty much shows you overall market sentiment. The higher the percentage, that means the more stocks are participating in the overall upside of the market. If we're heading higher, the lower the percentage shows you how much stocks are really not participating in a upward movement to the market. We got up to a percentage of around 76% back in the beginning of this year, around towards the end of January. And since then, you see the overall momentum has shifted towards the downside. We were as high as 76% of stocks trading above that 200-day moving average around about the beginning of February. Now, as of the close of business on 3/24, it's showing at 40%. So big time drop in overall momentum, overall sentiment, market sentiment since the beginning of February. I like to use moving averages in here as well, because the moving averages also give you a gauge of the overall direction and overall sense of the direction of the sentiment. So looking at this chart, I have a 50-day moving average, which is the blue line, and I have a 20-period moving average, which is this yellow line. Then I have a 200-day moving average, which is this red line. As you can see, as the overall sentiment of the market began to shift lower, you see that the 20-period moving average started to bend lower as well, crossing below the 50-period moving average. A lot of folks will call that a death cross, which means that momentum is getting weaker and weaker and weaker, week in and week out. Every time we get these little short-term bursts in the market, it's been met with some fierce selling. So it's been met with some fierce resistance, and overall sentiment is continuing to get more negative. Now we have been testing this 200-day moving average in a major way over the past week or more. So this has been an area where the bulls and the bears have been in a strong fight, and that's normally what you see around a 200-day moving average. However, this 20-period moving average is definitely in control of price action. In control of this percentage action right now. Looks like this 20-period moving average is going to stay in control until we see a strong rally above it. So whatever we see here in this sentiment tool, we're going to see the same thing in our overall market. So that's why I like to start off using that first. So again, overall sentiment is showing that more and more stocks are starting to drop below the 200-day moving average in a nutshell. Now, looking at the way action ended on Friday, I do expect this to rise up just a bit as we go into next week, maybe even above just a little bit, because we're in oversold territory by looking at the full stochastics wins percentage and the RSI. We are definitely been hanging around in oversold territory. So we could see a little bounce again off of this 200-day moving average. But last time we got a bounce off of this 200-day, we went right into this 50-day, right into the 20-period moving average and came right back down. So could we be in store for the same scenario? We have to see. I think that's a more possibility than not. But I think this 20-period moving average and now the 50-period moving average is going to act as strong levels of resistance. So again, we could see a short another short burst in overall sentiment towards the beginning of next week. Then we have to see how we close out at the end of next week. That's the tool that tracks the stocks that are trading above the 200-day moving average within the S&P. Now let me go straight to our VIX. show you guys what this VIX is showing us in the near term. So here's our VIX. Again, I told you guys that this shaded area I had down here was a long-term shaded area that the VIX has been, hovering around support at a better part of a year. Then we finally got a big bounce away from that area, bounce back above major moving averages in a major way. So we got this huge bounce back around the beginning of March. And then slowly but surely, we hit this high of around 29, and then we start to taper off. But as we continue to start to taper off, we got to the bulls pretty much made. The VIX made a statement. It is ready to go higher. Big bounce back above its 200-day moving average, folks. It has not done that for a while, so that was a clear signal to me that the VIX is definitely starting to ramp up. So the VIX is getting ready to ramp up. We have not had a huge burst like that for quite some time, and as you can see, as I go back here, see how the VIX has been pretty much on a downslide over the past year or so until we got to this point around March. So, of course, I think the next couple of months are probably going to be really bullish for the VIX in general, and it's going to be negative for our markets in general. I'm going to show you guys what the longer term charts are showing us here in a second. But in the near term, looks like the VIX is definitely starting to grow some wings here. Now, since we got that big burst above the 200-day, you see we started to fade. But look what's happening as we started to fade. It looks like the shade area may be out of play. Don't like we going back into this deep area where we were pretty much in a very flat area where we were pretty much below 20. Looks like we're probably going to end up holding this 50-day moving average in a major way, possibly. So we could see a little bit more pullback in the VIX over the next as we begin next week. But I think this 20-period moving average, this 50-day and 20-day actually. This area here is going to act as a strong area of support for the VIX. And I think eventually we're going to march right back up. So pay close attention to that as we head into trading next week. By the end of next week, we could definitely see the VIX right back above this 200-day moving average. And the next time we get back above, we may hold that level. So we have to see how that pans out. But I'm going to show you what's popping up and what the longer term charts is showing us, which made me believe that we are definitely out of this range and definitely going to start to see the VIX trickle high over the next couple months. All right, let's look at take a picture of the S&P daily chart. Here's the S&P daily chart. What I'll point out here is that see price action after we hit this area around 4,100, we just started to dwindle lower. So we hit that area right around 4,100 back in January. And since that level, we've just been going lower. Got down to a low about closer to that 3,800. Told you guys to watch this 3,800 level. That is going to be a key crucial area to watch over the next month or so. We break this 3,800 level, folks, we probably going to see some fierce selling to the downside. So keep that in mind. So as we got to that 3,800 level, we started to rally back up, and look what's happening. Price is starting to react to these moving averages in a major way. Hit the 20-period moving average here, bounce up a little bit more, hit the 50-day moving average here, and starting to get rejected. Now we had this 50-day moving average that's going to act as a level of resistance as well. So we got to pay close attention to that. So what we definitely could see with the wins percentage still turning upward, full stochastic still rising, RSI still rising, we could see a little rally within the market next week. But I think this 50-period moving average is going to act as a strong level of resistance. So we got to see what happens. So we could definitely see the S&P try to make a shoot back up towards 4,000, the 4,000 level. Right now we're right at about 39.70. So it would not surprise me to see the S&P make a run back up to about 4,000. And then we have to see what happens there. But I think these moving averages are going to start to act as a strong level of resistance and continue to compress overall price action. Take a look at the Dow Jones. Dow Jones, same scenario. Again, we see 20-period moving average is doing what it's supposed to do. Definitely act as a strong level of support resistance every time we have on the way down. As we run into this 20-period moving average, we have continued to trickle lower right here as well. Now we have the 20-period and the 200-period moving average all starting to converge. So would not surprise me to see some consolidation here or even a little rally as the oscillators and the Williams percentage, full stochastic, and the RSI continues to try to perk up. But I think this consolidation here that we've been seeing over the past week or two, it's going to end up moving in favor of the bears eventually. But I do think we could see a slight rally here as we go through next week. But again, I think the 50-period moving average and the 20-period and the 200 days is going to eventually act as resistance. And I think we'll start to see this 50-period moving average start to curl over as well. So price action will, if it does rally, will bump its head up until that moving average, more than likely pull right back. So again, like I told you guys before, all rallies I think in this market are going to be sold quickly because the bears are definitely in control of this market. I'm going to show you guys what the long-term charts are showing us, which is confirming that the bears are now in control of this market. So rallies are probably going to be sold, met with some fierce selling pressure. Take a look at the NASDAQ. Now the NASDAQ, on the other hand, I still think it's it's going to be met with some fierce selling pressure. NASDAQ is trying to show a little bit more strength. Price action bumped back above its moving averages right here. But it looks muted because if you look here, you see these long wicks on these red candles. They definitely like price action is getting ready to start to falter. We're definitely showing some overbought territory. You look at the Williams percentage, full stochastics, RSI, all hanging around that overbought territory. So I think the NASDAQ is probably going to be met with selling pressure on next week before the other indices will. So pay close attention to that. I think the NASDAQ is getting ready to start to see its fate meet the same fate as the other major indices with this way the NASDAQ setup is looking. All right, so now let's take a look at, so we're looking at the Dow, the S&P, NASDAQ. Make sure, yep. So we got all straight. Let's take a look at the Russell 2000. Here's the Russell. The Russell has been the weakest link. Russell has been the weakest link. 20-period moving average again, definitely in full control, which is this yellow line. And now on the Russell, we're starting to get the 20-period moving average is starting to just cross below the 200-day moving average. So that's definitely negative. So now we're definitely in oversold territory. Look at the Williams percentage, full stochastics, RSI, oversold territory. So I would not surprise me to see like a little rally, but these moving averages are definitely going to start to act as strong levels of resistance. So any rallies, it's going to probably bump its head to these moving averages and come right back down. I think we're about to test some major levels of support, folks. And I'll show you what those look like on a longer term charts. But if those support levels are broken, you're definitely going to start to see the markets be met with some fierce selling pressure. So again, any rallies I think will be short-lived, folks. So we're not in a bull market, we're in a bear market. So all these rallies are going to be met with some fierce selling pressure. All right, let's take a look at crude oil. All right, crude oil has been under some major pressure, folks. As we reach this 70 level, it's like it's acting as a strong level of resistance for crude. And the volume, the selling pressure volume, the volume has been increasing as prices have been dropping. See, that's one thing to point out. So I think crude is going to stay under pressure. And with crude under pressure, folks, I think it's going to really bleed over into the overall markets. We have price action staying muted below the 20-period moving average and the 50-day moving average. And we're already below the 200-day as well. And looks like we could be heading lower. So now we have the 20-period moving average starting to really head trend lower now, well below its 50-day moving average. Price action is back up to a strong level of resistance with a possible reversal candle here. So would not be surprised me again to see like a low rally in crude. But again, I think it's going to be met with some fierce selling pressure at these moving averages. So we got to keep that in mind as we travel, head to do trading next week. Take a look at gold real quick. Gold has been the outlier, folks. It has really been showing some strong strength to the upside, up at towards the top of this trading channel. So again, I definitely think longer term gold is definitely strong. We're starting to see a bullish crossover of the moving averages right here in gold, with the 20-period about to cross over the 50-period moving average, which is a strong bullish signal. Now, in the meantime, we definitely see some overbought territory where crude is. Crude is definitely showing some overbought signals, overbought with the full stochastics, overbought in the RSI. So with gold, it would not surprise me to see some type of pullback, but the overall trend is higher. So maybe a pullback and meet the moving average somewhere before we take the next leg up. So keep that in mind for gold. And if we take a look at silver, same scenario, looking extremely strong. Silver. If we look at the moving averages, the moving averages here look quite opposite of the overall markets. Price action came down, meet this 200-day moving average. And that's when we really start to ricochet. And we started to see the 20-period moving average start to hit the 200-day and start to curl up, right back up into a bullish fashion. So I think as price action continue to rise, we're going to use the 20-period moving average and the 50-day moving average as a level of support, just opposite of what we're seeing in our market. So I think we'll start to see gold and silver continue higher. We definitely in some overbought territory now, so we can see a slight pullback, meet these moving averages somewhere here, and start to move right back up. So over the next week or two, we could see a little pullback in silver and gold. But I think we run into these moving averages and start to trend right back up. Now, so that's what the here and now looks like. Let me show you guys what the bigger picture is looking like. It's shaping up to be, or showing us. So you get a general sense of how deep we are in this bear market. Now, I do believe that over the next couple of months, we're probably going to see the bulls continue to be met with some fierce selling pressure. And I do mean fierce. Let me show you guys what the longer term monthly charts is showing us. Yeah, first, I want to look at the VIX monthly chart. All right, here's the monthly chart in the VIX, folks. I'm going to throw this out because I want you guys to look at totality of circumstances. Look at the entire picture, so you get a general sense of what this VIX and what these monthly charts are showing us. So we saw the VIX make these huge highs back in 2020, back in 2008, and get that sell off. What's happening now? We've seen this high back in 2020, which is around 80, And we've seen price action pretty much go into almost like a valley. And it looks like we are starting to perk right back up. That's what it like we're about to do, like we're about to break right back out to the upside since the 2020 big gap up or big rally in the VIX. I think we're about to see a similar type rally in the near term over the next couple of months. So we could start to see the VIX really perk up. You look at the oscillators within the wins percentage and the full stochastics. You see they pretty much made a round trip since 2020. Round trip back to oversold territory. Look what's happening on the monthly chart and the full stochastic. It looks like we're about to see a huge buy signal on a monthly chart. That is a huge deal, folks, meaning that whatever we see in the near term noise, it's going to have no effect on what the overall longer term trajectory is showing. It's showing us that the VIX is probably about to break out over the next several months. So April, May, June, July, we can start to see over these next couple of months, we can start to see the VIX just continue to inch its way higher and break above 40 without anybody even noticing it, because nobody's really paying attention to how much volatility we see in this market and how the volatility is starting to get more intense. Look at the RSI, it's starting to show oscillators starting to turn up. Now, if I was to just blow this up a little bit, see it even more well defined, where the VIX over the past couple months just pretty much came and started to settle in this general area. A solid level of support. It looks like we're starting to ramp up now. Starting to ramp up. Look at the wins percentage coming out of oversold territory. Stochastic starting to rise out of oversold territory. So the next couple of months, folks, I can definitely see this VIX really starting to ramp up and start to challenge some of these long wicks, some of these levels. 35, I think it's going to be broken in the near term. Over the next couple of months or so. So keep that in mind, folks, that we're really starting to ramp up. So whatever rallies we see within the market, probably going to be meet with some first selling pressure, and you're going to start to see this VIX really start to shine between April, May, and June. So keep that in mind. Let's take a look at the S&P. Here's a monthly chart on S&P, folks. Look what's happening. Told you guys how 20 per moving average is going to act as a level of resistance and support. So look what's happening when price action is dropped below 20 per moving average. Look what it's doing on this monthly chart. And look what the 20 per moving average is doing. It is starting to curl lower, folks. Since, what's this, April of 2022, we have seen price action pretty much over the past year, folks. It has not really shown any major trend except for downward. And now it's like we are below this 20 per moving average on the monthly chart, and it's acting as a fierce level of resistance. Now we're back to testing this 20 per moving average here. So now we're starting to see the space between the 20 per and the 50 per moving average on this monthly chart starting to get tighter and tighter and tighter, with the 20 per moving average heading lower. And every time we run in this 20, like we are definitely starting to head lower. Okay, so price action is definitely being compressed over the longer term, and it's like it is being compressed and pushed lower. That's what the monthly chart looks like on the S&P. Here we are on the Dow Jones monthly chart. Look at that. Again, you see the movement in price action. It's definitely not in favor of the bulls, folks. Definitely not in favor of the bulls. Running into some fierce level of resistance over the past year, And it looks like the 20-period moving average is definitely starting to take control of price action. And we see these monthly candles starting to show some lower highs and lower lows. Dropping here, getting lower here, with the 20-period moving average acting as a strong level of resistance, as you can see there. And that's going to continue to show some pressure to the downside until monthly charts start to show some big moves above these moving averages. I don't think that's happening anytime soon. Look at the volume starting to increase. Increasing volume on the way down is definitely a in favor of the bears in a major way. So keep that in mind over the next couple of months. We're going to start to see the markets really fade lower. So it looks like this is going to be a elongated, brutal movement for the bulls in general to the downside, and it's going to be hard for the bulls to make money. So me personally, I'm continuing to play this market on the short side because I like the short side is it's starting to be a little more favorable and not being caught in these uptrending rallies that they end up getting met with some fierce selling. Ultimately, this is our ultimate target. I think we're definitely going to start to break down below the highs of 2020, and we're getting close, folks. Look at the 50-period moving average, getting very close to price action here on the monthly chart, and we're getting very close to breaking a major level of support. That's the Dow Jones. Now let's switch to NASDAQ. It's a NASDAQ monthly chart. And one thing the NASDAQ is trying to fool the bulls is get them a over sense of security, believing that we are definitely in a bull rally. If you look at the oscillators and the Williams percentage, full stochastics, and the RSI, they hit some oversold territory, and it's like they're starting to curl up, which they are. The monthly chart starting to curl up. However, those moves have been not anything extravagant off of the 50-period moving average, which is what it's been bouncing off of. But look at the 20-period moving average; it's still bending lower. So what I see here is a little rally as we head into the summer, head into June, April, maybe. Then we're going to start to see some fierce selling pressure here on the NASDAQ as well here in the near future. It's going to run into this 20-period moving average, and 20-period moving average is going to keep price action compressed and eventually compress price action right back below this 50-period. That's what I see that we can see actually happen because we're still in the bear market. And until that changes, we're going to be the bulls are going to be met with some fierce selling pressure after every rally they see. So I think the 20-period moving average is about to compress price action even lower, even in the NASDAQ. Again, we're looking at the monthly charts right now and showing you guys what the bigger picture looks like. It looks in favor of the bears. All right, now let's take a look at the Russell. And Russell even looks even more dire. See, this is what I think the fate is going to be for the major markets is that every time, especially on this monthly charts, you run into this 20-period, we get met with selling pressure. And we're starting to see that in a major way in the monthly chart of the Russell. Every time we reach this 20-period moving average, we just continue to get pushed lower. And now you got price action trading below its 50-day moving average on the monthly chart. And about to break a long-term level of resistance, support, which is going to be detrimental for the overall markets. Look at the oscillators and the Williams percentage pointing downward. Stochastics pointing downward, RSI pointing downward. So this is definitely the Russell leading the way, showing you guys what the overall fate of the market could be very, very soon. And the Russell dips below this level of resistance, right? Or level support, I keep saying resistance. Level support right around 1650. We're going to be starting to hit lower than the 2020 highs. All right. One more thing we'll look at before I head out of here is a look at gold. And gold is just the opposite. Look how strong the monthly chart of gold looks, folks. And it's showing you the opposite. The 20 period is acting as a level of support. Look at that. 20 period moving average is now acting as a level of support for price action in gold. We dipped, you know, from this high all the way down to this low back in October of last year. 20 period moving average has pretty much stayed level. Now price action is back above it, and it's using it as a level of support. So I do think gold is going to continue to show some strong moves throughout the course of this year, with a lot of uncertainty starting to show up in our overall markets. Gold is starting to show its ability to be a safe haven for where people want to put money to see movement to the upside. So it looks like we're going to continue to see this action in gold over the next couple of months, maybe next year or so. Look at the oscillators in the full stochastics. It's definitely strong to the upside. As percentage, strong to the upside. RSI, strong to the upside. And as price action is rising, so is the volume. So it's all positive for gold. And if that is showing positivity for gold in the long term, then silver is sure to follow. And silver is just getting started, folks. So silver right here, it's starting to get its first bounce this month off its 50-day, 100-day moving average. 200-day moving average, folks, and the 50-day. We're getting a bounce here. So strong off of this bounce off of this 200-day moving average, we're going to start to see silver probably take off to the upside too. So I think this year is going to be a good year for gold and silver, especially with a lot of uncertainty going on within our economy and within the markets. All right, folks, this was a long video, but I wanted to show you guys the near term and show you guys what the longer term picture is showing us. Again, the bears are starting to sink their teeth into this market. These next couple of months are probably going to be very, very crucial for you to really pay attention to your longs. If you are trying to play this market on the long side, just keep in mind that these next couple of months, we're probably going to see the VIX really ramp up, which means we're going to start to see the market really start to roll over some more. All right. Till the next video, Tim Davis signing off. Enjoy the rest of your weekend, folks.